Welcome to the very first episode of Climate Fusion Talk, a podcast where we explore the intersection of climate innovation, geopolitics, and technology, with a special lens on the APAC North America connection. I'm your host, Tim Liao. Today, we're starting with a topic that often gets overlooked: mining. From EVs to solar panels, the climate transition depends on minerals, and mining is where it all begins. We invite two experts in this talk: Luke from the investment side, who I met when he was an MBA student at Stanford, and Chief of Growth of Terra AI, Daniel, to share their insights. Before we get started, I'd love to introduce the organization behind this show. Climate Fusion Talk is proudly presented by Gomorrah Silicon Valley Association, or GMSV for short. We're a nonprofit that brings together climate innovators, investors, and policy thinkers across Asia and North America, building bridges where solutions are all urgently needed. As for me, I'm Tim, the Vice Chair of GMSV and formerly a venture capital investor focusing on early stage climate and supply chain technology, including carbon project development, carbon accounting, energy management software, and etc. These days, I'm rolling up my sleeves again back to the operational side in New York City. So, let's get into it. This is the first episode, so we're going to more into the interact with, like, say, mining and also geopolitics. And in our second episode, we're going to invite a couple of entrepreneurs and founders talking about the very detailed vertical solutions for mining. So yeah, Luke, do you want to introduce yourself a little bit?
Yeah, absolutely. Thanks for having us, Tim. So I'm Luke Wren, Chief of Staff at Terra AI. So my background is, as you said, I'm originally from Perth, Western Australia, which is a major mining province.
Macro perspective on how climate tech.
I was educated locally, worked in consulting, and then went into the mining investment world, where I had the opportunity to essentially seed and then develop three mines. So that takes us between 2016 to 2022. At that time, I moved to the US to go to Stanford Business School, essentially as a reward to myself for all the hard work. And then after graduating, I met the team at Terra AI and was just kind of blown away by the technology and its application in mining. And so I'm very excited to be here representing the company.
Awesome. Danny?
Yeah, hi, I'm Danny Donahue. I have a degree in geology. I am also have a background in finance and was priorly the founder of a tech company. I am the head of growth here at Terra AI, predominantly focused on engagements like this, joint ventures, partnerships, fundraising, government relations, kind of all the fun, interesting, external, exciting stuff on capitalizing on the zeitgeist that is mining right now. But no, I think we appreciate you having us on this podcast. And I think the topic is a timely one. It's one of the rare kind of consensus points with all sorts of different perspectives in this country and in the world right now that mining and minerals are going to be really important for us for a very long time. And, this is a great time to be having this conversation. So thank you, Tim.
Awesome. Seems like Danny and Luke, both of you are from Terra AI. Do you want to talk a little bit about, what do you guys do?
Yeah, sure. So Terra AI is a mineral exploration AI company that partners with mineral explorers as well as reservoir companies. That's kind of a separate vertical that I won't talk about on this episode, but we do partner with folks in carbon capture and geothermal and stuff like that. But we partner with these companies to optimize and accelerate their exploration and development of subsurface resources. And so the way we will typically work is someone will send us their data and they'll say, I have a project that I need to screen or target or develop, and I need to do it faster, cheaper, more efficiently with better information. We'll take that data, we'll come up with, using our generative AI that's patented, we'll come up with hundreds of thousands of realizations of the subsurface and what is called a model ensemble that all match the data that they send us. So tons and tons of subsurface models. And that kind of variability within this ensemble gives us a picture of things like uncertainty, probability of different types of rock, probability of ore, and really interestingly, a probability of outcomes for the project. Is this a profitable project? Is there an outcome here where it's not? So we can help people walk away from these ensemble statistics or double down.
Mm-hmm.
But then that's on a strategic level. On a tactical level, we're also helping develop and explore these projects optimally as well. So we take that ensemble of three-dimensional models
Mhm.
We run it through an optimizer that comes from self-driving car world. I can go into more detail about that later, but
Mhm.
we'll then simulate out every possible action you could take over that wide array of possibilities. And what we'll end up doing is optimizing your sequence of actions based on whatever strategy you give us. So if you come in and you say, I want to have the best discovery hole, I want to hit the highest grade on the first try. Well, we can help you out with that. And we'll do it 90% more accurately than a human can. Or I want to have the best sequence of 10 drills possible to upgrade my resource and make more money from defining more copper in my parcel. That's another thing we can do. And
Awesome.
so we are recipients of investment from Coastal Ventures and Rio Tinto. And I'll stop there, kind of turn it over to you. Those are
Awesome.
kind of the
Awesome.
high level points.
Yeah, amazing. We're going to talk about more. I think that, I think there are a lot of exciting technologies, and Terra AI is one of them. Love to learn more, during our conversation. Last but not least, about myself. So I used to work for Acorn Pacific Ventures. I focus on Series A investments, mostly in software, and I focus a lot on climate tech. So I look at, mining. Mining was one focus I look at, even like metal scrap recycling, carbon trading, carbon project development kind of software. So yeah, so very excited. As a VC, we kind of know everything a little bit, but we're not an expert in anything. So love to learn, have two experts here. Okay, so first question here. What does it matter? Why is it why is mining matters in a climate tech kind of context?
Well, Tim, I'll lead us off. I think one thing I'd love for the audience to understand is in my kind of 10 plus years in mining, in my, developing three mines, I don't know a single experienced mining professional that believes that using existing processes, existing methodologies, that we will build enough new mineral supply to support the energy transition in a time frame which doesn't imply catastrophe. That's a lot of the motivation for our team at Terra AI. That's a lot of my motivation in the career that I've taken. We're looking at something in the order of 2 to 6x increase in demand for a set of critical minerals in the next 10 to 15 years. And then on the other side, we're looking at an industry where typically taking a discovery, so a newly found mineral deposit from that discovery point to the point where it's actually producing something that can enter the supply chain and build the electric cars, build the solar panels, build the wind turbines that we need, build the defense technology that we need, AI data centers that we need on top of that. That typically takes 17 years, and the vast majority of that is spent in exploration, and it creates a lot of problems. I'll leave it there, but suffice to say, we see a big problem coming in the space.
Mm-hmm, mm-hmm.
If everything around you in the room, the computer under your fingertips, the paint on your wall, the steel in your building, if it wasn't grown, it was mined. Now that's a common refrain in the mining industry. So one of the big issues is that new technologies for the green energy transition aren't going to require just the standard transition battery metals, but they're going to require new types of metals, new battery chemistries. They're going to require rare earths. Every component has to be sourced. And these technologies are all much more metal intensive per unit of energy than any other energy source we've seen previously. And so, we have an industry that operates on decadal timelines. We have an industry that is running out of easy deposits to find. And yet that is completely decoupled from the demand spike that we're seeing. It may not be hockey stick EV adoption like we were afraid of, 5-10 years ago, but it is a long-term commodity super cycle. The industry just cannot address under current technologies, current financing solutions, current markets. That's one of the biggest reasons why Terra AI
So
exists.
one question here. So if it's
Yeah.
that important, right? It's actually everywhere. Then why do people ignore it for a long time? And all kind of innovations in the space. Why?
I can probably speak to that,
Yeah.
given my time in the industry. So look, I mean, for my entire career, I've been chasing mining projects. I'm a pretty young person. I've always been a believer in the energy transition, whether to avoid catastrophe or on simple economics. I'm a believer that it needs to happen. I think we've gone through a few phases in how people think about it, and I think in the first phase, it was kind of like, call it the early 2010s. Are we going to have an energy transition or not? I'll just flag right now that the people who bet on us having that transition, invested in lithium at that time, have made a lot of money.
Yeah.
But there's a whole new set of minerals that are becoming increasingly relevant as well. So I think we're going to see that opportunity
Vanadium.
replicated.
Yeah.
Vanadium, graphite, rare
Graphite.
earths, absolutely.
Yeah.
Copper is a big one right now. So when we move past that point, I think we entered a long phase where people understood that the energy transition was coming, but they were afraid of investing in new minerals essentially because of the timing. So it's okay, lithium batteries have taken off. Now what's next? Will vanadium batteries take off? Will EV adoption rates meet expectations? There are a lot of those kind of questions in the middle of the last decade. And then we kind of went into a period where I think really there was a pretty strong consensus in kind of the late 2010s, 2020, that absolutely this is happening and this demand's coming. But we kind of, I think most generalist investors, frankly, had the attitude of, oh, well, if demand is coming, and by the way, I mean, I was talking to people at Tesla, I was talking to people at some of these big companies and supply chains, and I think this is broadly true. There was an assumption that if the demand comes, that the industry will meet demand, that the industry will invest in meeting that demand. But frankly, that didn't really play out. I'll make a self-criticism here. As an industry, the mining industry is historically not been very conservative. We don't tend to underwrite projects on the basis of future demand or future prices. We tend to underwrite based on, the last few years of what we've seen. And so that
Even the
really,
most
yeah.
sophisticated banking models just do like,
Develop a new project, etc.
Well, I mean, so it's very important to acknowledge here that it's different in different commodities. So I think Danny and I are going to talk more or less in terms of what's generally happening in critical minerals. But every commodity is kind of running on its own cycle. And especially for mature commodities, they tend to be quite cyclical. So, for example, the copper price is quite cyclical. The iron ore price is very cyclical. But where the big opportunity is as Danny alluded to earlier, we're seeing a lot of minerals which haven't really been that relevant in terms of demand, in terms of industrial use in the past, which are now becoming very, very relevant with new technologies like AI. So, for example, I mean, I mean, lithium demand's kind of gone up by something like 5x in the
Hmm.
last decade, maybe even more than that. But, if the energy transition plays out, you'd also expect to see things like vanadium demand spike by an order of, 5 to 8x. You'd also expect to see graphite demand spike by an order of, 4 times, rare earths by 3 times, cobalt by 4 times, the list kind of goes on there. So we've got some very low existing supply bases and exponential growth forecasts in the next 10 to 15 years. What that means is instead of seeing that typical cyclical pattern, we're expecting to see more like what happened in lithium, where the price, kind of went up from, barely relevant 15 years ago to being worth on the order of,
So how
several
do
thousand
so,
dollars.
so a quick question. So how do you explain that, the price of, let's say, lithium is still decreasing since 2023? I just checked the price this morning and it's still, decreasing in a pattern.
we'll compare the price to 20 years ago, because that's
Hmm.
how long that's if you were building, or 10 years ago, if you were building a mine 10 years ago or 20 years ago, it'd be coming online pretty much today.
Hmm.
So that's the time scale you're looking at, unless you're a trader,
Hmm. Hmm.
in which case these kind of like very short term,
Yeah.
these very short term wiggles like you're describing are
Yeah.
relevant.
So,
Hmm.
so I think in general, we'd expect all commodity prices to generally be cyclical. But the point I'm trying to make is that it's going to be a very big rising cycle, and very different to past cycles where, frankly, past cycles have more or less been powered by demand. The
Hmm.
last commodity super cycle was essentially the growth of China, the growth of India. One country or one region of the world, a handful of specific use cases. Now what we're seeing is, I would call it a generational opportunity, frankly, something that we haven't seen, maybe in industry since, oil became industrially relevant, where, there's a big group of minerals where we need to roll out,
Hmm.
renewable energy infrastructure, data centers,
Yeah.
electric vehicles all over the world. It's not dependent on one country's economy. It's a lot less cyclical. You would expect it to be a lot less cyclical in the past. To the extent that commodities are cyclical, Tim, what generally drives it is if you look at any given commodity, what typically is driving the cycle is the lead time
Hmm.
between is the lead time between, a spike in price and the time it takes to actually build a new mine. So for example, in iron ore, we might say that the typical cycle is about, 10 or 15 years. That's because a typical iron ore mine takes about that long to build. In copper, you might say that it's something on the order of, 12 years. That's because a typical copper mine takes about 12 years to build. So
Yeah.
it's pretty intuitive in that sense. You just have to kind of know that, different mines have different capital, different commodities implies different types of mines, different regions, different, requirements, which drive different kind of build times.
So I just want to point out here and kind of pause and say, if you're listening to this, you're probably thinking, okay, everyone sees the IEA, the McKinsey, the S&P, the Bloomberg reports about rising demand, and it's, rising tide lifts all boats. And you will think that means that majors, small caps, all the mining companies will be investing in tons and tons of new supply creation and expecting production to go up, right? That's what you'd think. And Luke kind of alluded to this earlier by saying, in the 2010s, this is what we thought would happen. Major car companies figured, we will buy our stuff on the open market. China's control of this wasn't an issue yet. Even taking that kind of element out of it, you're going to think this will just rise. Production will rise to meet this demand. That's just not happening today. The forecasted production of copper from a lot of the major copper producers all around the world is lower over the next 5 years than it was in the previous 5 years, despite
Absolutely.
rising demand. And there's a reason for this, and we can kind of go into walking you through step by step how it shakes out. But the fact of the matter is that new supply creation is getting harder. There's a technological gap that is reflective of the fact that we have run out of easy stuff to find right before we need way, way, way more of it. Put in very simple terms. This manifests in a lot of different ways in the markets, but I'll kind of pause there to see where you want to go with it, Tim.
Yeah. Also for the context, I think also some audience might not be familiar that, like some of the most like I would say hottest topics in climate tech, including solar, wind, energy storage, even like the data center. What are the most important, let's say, minerals within all these technologies? Anyone want to explain a little bit to our audience?
Sure. Yeah. I mean, there are.
Yeah, absolutely. Danny, I'll take this one. And look, Tim, I'll just flag that maybe it's new to your audience that mining's incredibly relevant, but you just mentioned people like solar, solar manufacturers and whatever. In the mining industry, or at least for my part, we've had close relationships with people in that space for kind of ever since the energy transition really seriously began, over 10 years. And I can tell you that from the people I've met at companies like Tesla, GM, Ford, the major solar manufacturers and major battery manufacturers, all of them would list material supply as among, if not their first concern, then, their second or third. So it's a big concern. And quite often it's for minerals that most people have just not been talking about at all yet. And by the way, that's a way to make a lot of money in this space, is to have those relationships and see that demand coming before anyone else does, and move on it, which is exactly what the people who succeeded in lithium did. They had those very close relationships with this is a APAC focused podcast. They had those close relationships with lithium battery manufacturers, with EV makers in China. And so while everyone else was guessing, they kind of knew what the in-house underwriting was on building new plants, and what kind of demand that implied. But to get back to your original question, so look, I mean, I think I'll baseline us off maybe let's say a conventional car. So your typical car, internal combustion engine vehicle today consumes overall about just under 50 kilograms of what we call critical minerals, and that's copper and manganese, lithium, nickel, cobalt, graphite, etc. An electric car consumes more like 250 kilograms on average. That's 5 times the amount. And then I think you specifically asked about solar. Well, a solar, for 1 megawatt of power, I believe you need about 4 tons of copper, and then maybe another 4 tons of silica, as well as a whole list of other minor kind of metals and ingredients like silver, high purity quartz, etc. If you compare that to coal-fired, overall needs about, call it 2 tons of the same material. So it's there's another kind of, so electric vehicles were about 5x, solar versus coal is about 4x the volume of these materials per megawatt.
Awesome.
So it's just a huge quantum of demand there.
Yeah, thank you. Thank you, Luke. These are all very detailed, answer. Thank you so much. Let's jump into geopolitics. I think this is also something that, somehow relevant to everyone right now. We're now in the era of geopolitics, tariffs, etc. Want to get started? I think there's a lot of tension recently, and and we see that, I think from the mining side, we've seen that for the past couple of years.
Yeah, I mean, I agree. It's the question of put very, very simply. If you believe in the future of AI or the future of robotics or electric cars or green energy or the future of national security, these industries have very physical realities. And if you believe AI will be a big thing, then the things that are making decisions around you, if you believe that robotics are a big thing, the things that will be moving around you, same thing with cars, the national security implications, the things that will be protecting you, are going to need more and more minerals as we progress. Do you want someone who you may or may not trust being the sole source of the materials that go into them and the production behind them? Because they're linked. You can't have one without the other at this point. And so,
Well, I'll be even blunter than Danny. Sorry to cut you off, Danny, but
oh,
I've got a quote which I think is great. Yeah, it's from a former president of the United States, which is not so popular anymore. But I think it's still a very valid quote. We can't have a future that's made in America if we are dependent on China for the materials that power the products of today and tomorrow. I think that really that kind of really captures it. You can't rely on a potential adversary or potential adversaries. You can't rely on potentially unreliable partners. You can't move with a free rein in foreign policy if your industries are dependent on a single country or a single, group of countries for all of the raw materials you need to power your key industries. Like, we're talking a lot about onshoring manufacturing in the US at the moment. Danny and I think we both have a lot of friends in defense establishment as well. It's like there's this wake up call, and it's history repeating itself to an extent. Decades ago there was a big realization. Well, oh my gosh, we can't build our spy planes, we can't build our fighter jets without titanium sourced from, Russia. Well, we're in the same situation today, except the list of materials is just a lot longer, and you can kind of
yeah.
replace the USSR with China in the analogy.
What the analogy I like to make is it is 1970, but instead of OPEC being a group of kind of squabbling states whose only unification was hating Israel, you have one strategic, like, peer level adversary, and it's not just in oil; it's in 24 commodities, and it's not, and I think OPEC at the time controlled a little, like, not like a majority of the market. It was a large part. They had price control, but not actual output control. China is like dominating huge, like up to 90% of many of these commodities. So I think the OPEC analogy I like, because that was a massive wake up call for the US.
Yeah.
And we scaled up production of oil. We
Mhm.
deregulated. We hit the gas literally. And our diplomacy was colored by it. We had great oil diplomacy for decades after that.
Yeah.
In this case, it would traditionally take decades to make that kind of a change happen in minerals. And so the US always does this. We always sort of are complacent. We get our backs up against the wall. And we innovate the shit out of it.
Uh-huh.
And we throw a ton of money at it because the problem is big enough to make a big
Let,
opportunity happen.
let's take a step back. So also for the
Yeah.
context, we heard a lot about, like, rare earths,
Yeah.
and lithium, highly, I mean, at least from the US perspective, we're highly dependent on China. So can you explain about the supply chain? Why are all these, like, major materials highly dependent on China?
You want to go back to the 90s, Luke? Maybe just kind of give them the history.
Three minutes. 3 minutes.
Well,
Not no
okay.
longer.
I'll try to be really pithy. So I think, as much as geopolitics and everything comes into it, it's very hard to complain about China controlling so much of the supply chain. It's not productive to complain, right?
Mhm.
China controls the supply chains today because when the world-class assets, when the new mines were available for the bidding, for the most part, China turned up and made a bid, and Western companies didn't. And we can go really into the weeds on why that's happened and the finances and the economics and everything. But in a nutshell, China has very low cost of capital. And since kind of the late 90s, early 2000s, there's been a very, very deliberate focus on the part of China to secure the supply that is needed to power the industries of the future. There's been a focus on the materials of the future. So a few fun stats are something like, the vast majority of investment in mining from the Western world is in gold. Something like 40 to 60% in any given year of all the capital invested goes into gold. There's a lot of great reasons for that. But when it comes to building an AI data center, when it comes to building a fighter jet, they're really not that helpful. In contrast, China was not having this debate in the late kind of 90s about, oh, is there an energy transition happening? I think they more or less decided that it was going to happen, and they understood which minerals that would imply were important, and they went out and bought them. And there was a lot of benefit of the public-private partnership that you see in China in securing that as well, that in a way that unfortunately Western companies don't have the benefit of.
Hmm.
So, that means things like China was able to go out and buy cobalt supply in Congo, while Western companies were not sure whether, Congo was a place they could operate or not. That's a feature of a public-private partnership, right? That's
Can you
government to
give,
government.
sorry to cut off.
No,
Can
of
you
course.
give an example? Like I think you talk about like nickel, the kind of competition of nickel in Southeast Asia, right? Something interesting. I think that's an interesting
Oh,
story.
yeah, that's
Let's hear
very
more about it.
topical.
Great story.
Yep.
Yeah, well, I mean the ending of the story is that China now controls the majority of nickel production, and worse than that, it's the lowest cost majority as well. But bit of a story. I mean, so nickel is one of these large base commodities. So you would have thought that the Western world would have been relatively competitive in it because we have the existing base, we do have the expertise, we do have the people. But actually, what happened was kind of with the Western capital markets, there are a few high-profile failures in the Western world, which drove a lot of the money out, and specifically around a type of nickel called laterite nickel. So that's a harder to process form of nickel, and I would say more or less for the last 15, maybe even 15 plus years, we as in the West have said it is not possible for us to develop these mines and processing plants economically. Laterite nickel is a no-go, or we've been very shy about it. China made a breakthrough in processing technology, which enabled the massive mining and processing of laterite nickel. And that happened pretty recently. That's in the last kind of, 5 to 10 years or so. And what that's enabled them to do is go out to Indonesia. So Indonesia is really the focus here. And Indonesia has a rule where, okay, if you want to mine here, you have to process here for critical minerals. So China went, yep, sure. And China had the technology, had the capital, went into Indonesia, built all of these big mines, built all these big processing plants in a way where, in the West, we didn't invest in building the technology, and then we didn't, frankly, have the investment appetite or the low cost of capital that would enable investment of that scale in a place, frankly, like Indonesia.
Hmm.
This story is played out across commodities.
Yeah.
It's played out across commodities.
The,
So
the
don't get
important
me started too.
the important thing though to understand is like how did a lot of these projects happen? Who was owning them before the Chinese showed up?
Hmm.
Chinese exploration is not huge. The majority of deposits ever found in exploration phase today were found by Western companies.
Australian, Canadian, American.
Yeah, South African too. So what's happening here is over the past 20 years, there's been this very clear understanding of we need metals. And there's been this amazing Western exploration industry that's gone out and found those metals. But then in the very middle, where the financing gets hard and the permitting gets hard and the markets don't really reward risk taking at $1 billion scale, because these are all publicly traded companies, the Chinese have come and absolutely nailed a lot of the best projects in the world.
Well, the Chinese perspective has been that, the Australian Stock Exchange, the Toronto Stock Exchange, where most of these early stage mining projects are listed in these kind of, single asset exploration companies, their perspective has been that we've been selling them for a bargain. Frankly,
Totally.
we're selling the materials we need for the
3x
future at a bargain
multiples.
basement
Yeah.
price. But the reason why we're doing that is because it's very, very hard. I mean, to take it back to what Terra AI does, when it takes you 12 years to define a discovery to the point where you can actually build a mine on top of it, that's a very long lead time, and that's a long time before you see any payback. And then on top of that, it's going to take you a few years to build it, a few years to pay off all your debts and pay back your investors before you're really generating a real significant return. So that's a much easier equation for China to beat, when they have these kind of public-private and basically free money, frankly.
But like the reason we have a lot of problem speak in mining, and it's one of the things we need to get better at, and we need to be talking opportunity speak, right? We see this as an enormous opportunity, as a gigantic opportunity. Mining assets are cheap. The US is waking up to this. All sorts of new capital sources are available to the minerals industry, whether that's non-dilutive through the government or private through investors who are seeing this in the headlines every day. And there's this technological problem, which is that deposits are getting deeper and more complicated because we've run out of the easy stuff to find. And so we believe that if you can show that we can go deeper, we can go cheaper, we can get these assets and understand them a lot faster than we have traditionally, we can leapfrog that kind of 20-year advantage that China's been building up to own, develop, and exploit the mines of the future, which are going to be deeper. They're going to be more complicated. But that's why US venture capital is flowing into mineral exploration. Because if you can fix that, then you can unlock these assets and actually solve this problem. And that's
Great
why we're
answers, guys.
It's a timeline problem.
Yeah, these are great answers. Because due to the time limit, let me ask the last question or last part of the questions about the dilemma. I think there's some people who are cynical for mining in the climate tech space. They think there's a dilemma between, whether these kind of development of clean energy is harming or benefiting the environment, right? Because throughout the extraction, let's say for minerals, or even you want to manufacture lithium batteries, you actually create a lot of pollution. So what do you guys think?
You can drive past a mine, which is about a square mile, and you can remediate. That mine is remediated and regulated, and it's 1 square mile. It's not the prettiest square mile I've ever drive past, but I'm a geologist. I think it is. Or you can drive past hundreds of miles of agriculture, monoculture. You can drive past cities. I mean, it's like, if it's done right, it's localized impact. Western companies are better at mitigating environmental impact than anyone else in the world. If we don't do it, it's going to come out of the ground anyway. And so let's get out there and do it right.
I'd echo that, Tim. I would hope that the audience would have learned from, frankly, the mistakes of the past, where we had this debate and went, okay, well, mining, for example, in Congo, mining cobalt in Congo, that's very, very dirty. As Western companies, we don't want to do it. Well, now the reality is that we're still consuming the same cobalt. It's just owned by someone else, and it's mined frankly, it's the same mines, but now they're being run by companies which are maybe not prioritizing, environment, ESG at all. So, by disengaging, by saying, oh, this is dirty, we don't want to do it. Well, the reality is it's going to happen. People need raw materials to live. Like Danny said, everything's either grown or mined. And by the way, I've been an ag investor in a past life as well, and that's by no means a cleaner industry than mining, frankly. If you disengage, you're just going to wind up with a supply chain that's controlled by people that are going to prioritize the environment even less, and it's going to be a worse situation overall for everyone: the people on the ground, the consumer, the environment, everyone. So I think it's very, very important. So what I would champion is we as an industry, we want to either maintain or increase the environmental standard, right? But what we need is to shorten the timelines overall. So that may mean, okay, let's raise our environmental standards, let's raise our permitting barrier, but let's make the permitting process more predictable. As an investor, and anyone in mining, or the vast majority of people, especially in the Western mining industry, I think would agree that would be a better outcome for everyone. Because what really kills investment, and what's really going to kill new supply, and what's really going to kill the environment, because we don't have that supply, is a lack of ability to build it, because regulatory regimes are uncertain, because timelines driven not only by regulatory regimes but by the difficulty of exploration are just too long. If we don't build the new mines we need, in time, then arguing about whether the environmental impact today is too bad to engage with or not, it's just going to be ridiculous. It's a ridiculous kind of argument, frankly.
Awesome.
If you do engage with mining, the returns are phenomenal. The assets are cheap, and there is massive upside in the future. And so are there any climate investors listening?
Well, look, I'll be very blunt. I mean, my track record in mining has been, like I said, I've built 3 mines, I've invested in 3 mines, so that's, it's 100% hit rate in a sense, and it's driven a it's driven a $215 million return on about $14 million of investment. So it is possible. And I would say that the way I've achieved that is by being very focused on, we want to build mines focused on the energy transition, and we want to build them to be cleaner, cheaper, and better than the mines of the past. And that's very important to being successful, I would say. So it is possible. It's possible, there are people out there that are already doing it. And what technology is going to unlock is the ability to do it at scale.
Awesome. Great. Thank you so much, Luke and Danny. This is a great conversation. I think I still have about like 20 questions there, but let's save it. I think I have a lot of questions that we should talk about. But thank you so much for your time. And this is a great
Of
conversation.
course.
And
Yeah.
also for our audience, this is our first episode, which is obviously awesome. So feel free to ask any questions, and I will ask Luke and Danny to answer to your questions. Thank you so much.
Happy to help. Yeah.
Awesome.
Absolutely.
Reach out to us if you're interested in learning more. We're here and we're excited to engage. Thank you, Tim.
Thank you. Have a good day, guys.
Thank you, Tim. Pleasure.
Cheers.
Bye-bye.